Ladies and gentlemen, good day, and welcome to the ABS Marine Services Limited H2 FY25 earnings conference call, hosted by Kirin Advisors Private Limited. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I would now like to hand the call over to Ms. Chandni from Kirin Advisors Private Limited for opening remarks. Thank you, and over to you.
Thank you, Ryan. On behalf of Kirin Advisors, I welcome you all to the conference call of ABS Marine Services Limited. From management team, we have Captain Jeevan Krishnan Sanjeevan, who is whole-time director, Mr. Anantha Narayanan, Chief Financial Officer. Now, I hand over the call to Captain Jeevan. Over to you, sir.
Hi, good afternoon, ladies and gentlemen. I'm Captain Jeevan Krishnan Sanjeevan. I'm the whole-time director from ABS Marine Services Limited. It is a pleasure to welcome you all to ABS Marine Services Limited's inaugural earnings conference call. Thank you all for taking the time to join us today as we present the financial and operational performance of the company for the second half and the full year of FY25. We are especially pleased to address you following our recent listing on the NSE Emerge platform, which is an important milestone in our corporate journey. Before we proceed, we would just like to put a disclaimer that we are not forecasting the market trends, as we are only giving our views since our business shipping is always having uncertainties. To give you a company overview, let me begin with a brief introduction to ABS Marine Services. Founded in 1992 in Chennai by Captain P.B. Narayanan and Ms. Srilata Narayanan, ABS Marine has evolved into one of India's leading integrated maritime service providers. Over the past 3 decades, we have built a robust and diversified platform spanning 4 core verticals, which are ship management, vessel ownership, marine services, and port services. We currently manage a fleet of 36 vessels, out of which 7 are owned vessels and 1 long-term chartered-in vessel, serving diverse operations across offshore energy, oceanographic research, port operations, and coastal logistics. Our operations are anchored by offices in Mumbai, Cochin, Kakinada, and Singapore, and executed by a committed team of over 2,000 seafarers and 55 shore-based professionals. Our clientele includes Government of India institutions, public sector undertakings, global oil field service providers, and major port authorities. We are fully compliant with the Director General of Shipping regulations and certified under ISO 9001, 14001, and 45001, reinforcing our commitment to safety, environmental stewardship, and operational excellence. With a legacy of trust, a younger fleet profile, and an expanding footprint, ABS Marine is well positioned to support India's growing offshore and maritime infrastructure while delivering long-term value to all the stakeholders. To go through the FY25 performance highlights, FY25 was a landmark year for ABS Marine, marked by robust growth and strategic milestones. We secured over 350 crores in long-term contracts, including a 102 crore contract for 3 years from ONGC, 197 crore agreement with Schlumberger Asia Services for a DP2 well stimulation vessel, 27.97 crore contract from ONGC again for our recently acquired vessel Ocean Diamond, 20.6 crore charter for Emerald with Alpha Logistics, a 10.23 crore 5-year patrol boat, new build patrol boat contract with Chennai Port Authority, a 7 crore fire tender services contract with Visakhapatnam Port Authority. We have also expanded our fleet through the acquisition of the DP2 platform supply vessels Ocean Diamond and Emerald, both currently deployed under active contracts. A third DP2 vessel is scheduled for delivery in Q1 of FY26. Notably, nearly 180 crores of FY25 revenues came from renewed or renegotiated contracts on our existing fleet, demonstrating the resilience and consistency of our core operations. While contributions from IPO-funded acquisitions have just begun, we expect that the full impact of these will reflect in the coming quarters. Our strategic focus remains on asset efficiency, long-term contracting, and disciplined deployment. Financial overview for FY25 and H2 FY25. Consolidated FY25 performance, total income was 184.31 crore. EBITDA was 54.64 crores. The EBITDA margin was 29.65%. The net profit was 27.25 crores. The net profit margin was 14.79%. The EPS is 11.44 rupees. Standalone FY25 performance, total income is 175.51 crores. EBITDA is 40.04 crores. Net profit is 26.72 crores and EPS is 11.26. H2 FY25 versus H1 FY25, consolidated income went up 25% to 102.34 crores. EBITDA rose by 87% to 35.61 crores. Net profit more than doubled to 19.16 crores. EPS is 8.10 rupees. Standalone income up by 40% to 102.07 crores. Standalone EBITDA more than doubled to 27.94 crores. Standalone net profit up by 178% to 19.66 crores. EPS standalone is 8.29 rupees. These results underscore our strong operating leverage, efficient fleet utilization, and disciplined cost management, validating our business model focus on recurring revenue from technically compliant vessels under long-term contracts. Market outlook and strategic direction for us, we remain optimistic about the long-term outlook for our sector. As per the recent Rystad Energy's April 2025 report, offshore energy continues to account for nearly 30% of the global oil and gas production. In 2024, over $110 billion was sanctioned for offshore greenfield developments, with in Asia attracting an increasing share. India's maritime infrastructure is simultaneously undergoing rapid expansion, with more than 40,000 crore worth of port development projects currently underway through PPP model. The Union Budget in February 2025 announced key initiatives to support indigenous shipbuilding and increase the acquisition of Indian flag vessels. Chief among them is the proposed Maritime Development Fund, which aims to provide equity or debt support for vessel acquisitions and port infrastructure, aligned with the national goal of raising the share of Indian flagships in the global trade to 20% by 2047. While global trade uncertainties such as tariff shifts on steel, aluminium, and energy equipment do present challenges, our services focused and technically compliant model offers insulation from these macroeconomic headwinds. In fact, such disruptions heighten the demand for dependable, locally anchored marine service providers like ABS Marine. The offshore support vessel market fundamentals remain favorable. The global OSV, offshore support vessel order book, is below 3% of the total fleet, and the average age of active vessels exceeds 20 years. Our fleet, whereas has an average age of 12.4 years, stands out as a modern, safe, and reliable, an important differentiator as charterers prioritize vessel quality and compliance. Strategic priorities looking ahead, our key priorities include disciplined acquisition of younger high-spec vessels, prudent capital allocation to ensure strong returns, investments in digitalization and advanced fleet management systems, enhancing execution excellence across our operations, commitment to decarbonization and green shipping, strengthening shore-based capabilities, expanding presence in marine and port services, and creating a long-term sustainable value for our shareholders. With a strong balance sheet, a growing order book, and a committed leadership team, ABS Marine is poised to continue its growth trajectory and deliver enduring value to all stakeholders. So I thank you all for your time and continued support, and we would open the floor for any questions anybody will have.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and one. We take the first question from the line of Prince Chaudhary from Pink Wealth. Please go ahead.
Hello. Hello.
Hello, Mr. Brian. Good afternoon.
Yeah. Good afternoon, sir. Congratulations for the good set of numbers.
Thank you very much, sir.
And so my question is that, for our existing ships, are we going to see any contract renewal in the coming years, like in this financial year, FY26?
Yes, sir. I think for two of the ships which we recently acquired, that is what we mentioned, the name as Diamond and Emerald. Thereon, we immediately after acquisitions, we put them on short-term contracts, and we expect them to put them on long-term contracts towards the end of this year, sir. So we will see a revision in price for those two vessels.
And sir, what are the charter rates for those two ships? Is it like same, or like have we seen any dip in prices compared to our last contracts for the existing ships, if we compare it?
From the short-term contracts that we are currently having, we expect the prices to be slightly elevated for the long-term contracts, sir.
So for the long-term contracts, which these two ships will go in the coming time, so we are gonna get a good rate. Like I mean to ask, like, are we gonna get a charter rates will be comparable, like which are those ships like ABS Rohini, ABS Dhruva, so ABS Anoki. So are we seeing any dip in charter rates, or the charter rates are like strong? Just wanted to know that.
So the ships that we acquired, sir, are platform supply vessels, DP2 platform supply vessels. So in the marine logistics sector, they are at the top end. So we are expecting and we hope that the charter rates for these two vessels will be much elevated than the vessels that you mentioned, like ABS Anoki and all, which are smaller supply vessels, sir.
Okay. And sir, just wanted to understand on the part of MVRN. So since we have taken it on a lease and we are providing to our clients on lease the ships, so we are doing it on time charter basis or like bareboat charter basis if we provide services to our client.
So we have taken the vessel on a time charter, and we are further given that vessel to ONGC for a long-term contract, sir.
Okay. And so the fuel cost will be borne by them only, right? Not by us. If any
Correct,
fuel and water costs will be borne by the ONGC, not by us, right?
Correct, sir. In all the contracts that we are currently entered and we intend to enter, sir, the fuel cost, even in the not only in the offshore segment, even in the port segment, the fuel and water cost is always on the charterers. So we are at the moment we are not bearing any fuel cost on any of the vessels except if there's a breakdown or something and we have to come out. Otherwise, the fuel cost is always on the charterer, sir.
And sir, for those two ships, you said that we have entered into a short-term contracts. Do we see the visibility, like how fast we can see the visibility of getting it into long-term contracts? Is there any strong pipeline or any talks going on for those contracts for the long term?
Yes, sir. I think before the contracts expired, the short-term contracts expire in September, October this year. Before that itself, we are confident of securing a long-term contract so that there is minimum rollover gap between the short-term to long-term contracts, sir. That is our idea. And if we get a long-term contract much earlier, we would also be able to prepare the vessels with minimum rollover period in between for going into the long-term contract. That would probably help us in improving the efficiency for moving over from one contract to another contract.
And sir, one last question is that, since we have got a contract of petrol boat supply, so it's like we make those boats and we supply it. Is it like that, the nature of the contract?
Yes, correct, sir. So the port comes out with a tender, rather came out with a tender, where under this Make in India scheme of government, we have to build the boat with maximum local content and deliver the vessel to the port. So they give 1 year time for us to build the boat and give it. So we have in turn placed the order with the shipbuilder in India under the Make in India government order with maximum local content more than 60%. And that boat is on the verge of delivery. We hope to mobilize that boat and commence the operations sometime from July onwards, sir.
And so those boat will also be managed by us, right? So there will
Yes,
be
sir.
a
Fully.
ownership supply plus there will be a total management service also be provided by us.
Yes, correct, sir.
So this 102 crore includes only the like build and supply, or it includes also the management management contract also?
So the 102 crore is not that one. The port contract is 10.23 crore one. 102 crore is not the port contract, sir.
Okay.
That is the ABS Anoki contract which we got last year, which went under revision, and we commenced it from 4th of July.
Okay. So this ships which we are gonna supply, it's the contract size is how much? Like 102 crore or like 10 crores for 5 years?
That is 10.23 crore. It's a small hovercraft patrol boat, sir, which we are building and giving it to the port for a long-term contract.
Okay. Got it, sir. Thank you, sir, for answering our question. I'll stay in the queue.
Thank you, Mr. Brian. Thank you so much.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. The next question comes from the line of Priya Jain from Green Capital. Please go ahead.
Hello, Captain. I have a few questions with me. So,
Hi, good afternoon, Ms. Priya.
yeah. So, as I can see that ONGC and SLB are now major clients of ABS. How are you managing client concentration risks? Can you just make me understand a bit of it?
Yeah. So traditionally, we were quite focused on the government business, and we had a lot of government clients and PSU clients. But of late, we have also diversified into private oil field service providers, whereby SLB has come in. So that was a part of a diversification of client base for us to have exposure to the private sector also. Having said that, madam, we are also our core business also focuses on oil and gas business. So traditionally, compared to the common notion, 50% of the oil and gas which are produced offshore are all done by national oil companies across the world. The balance 50% is spread amongst the big oil majors. So it is important to work with national oil companies, especially when we are in this sector. And it also brings in long-term stability, revenue visibilities, and that comfort also comes when you work with national oil companies. But we have diversified with private shipowner, private clients also, and Schlumberger Asia Services is one such client, a reputed client with a good track record of payments that we have entered into contract with them. A rather big contract, in fact.
Any major contract renewal timelines for FY26 or 27? Are any major charters up for renegotiations?
So two vessels that we acquired recently, we expect them to go on long-term contracts towards the end of this year, madam.
Also, have you seen pricing improvements in recent contract negotiation, particularly in the offshore supply space?
Yes. We have seen considerable increase in the offshore vessel charter rates. It is primarily happening because of a very tight supply in this section, because of years of depressed markets where there was been no new building activities, and the number of vessels, younger vessels which are available, compliant vessels which are available, have come down significantly, and whereas the demand has also picked up. So this is a market which is favorable for the ship owners, and it is going to continue like that for a few years to come till there are more new buildings and more vessels coming into the market, which will take quite a bit of time to happen.
So we can expect a good top line next quarter.
Yes, we anticipate an improvement in our top lines in next year.
Okay, so are there any active bids or tenders you are currently participating, which can meaningfully?
Yes, we are expecting. Yes, we are working on acquiring one more vessel, which should be tied up with a contract that we hope to close it. All going well, we'll be able to close it this month. And we are expecting few more contracts and tenders, not contracts, tenders to come out from oil majors, where we wish to participate with our ships and go for contract renewals for these two ships, particularly the one which we bought recently.
Good to hear, sir. That's it from my side. Thank you. All the best.
Thank you, Ms. Priya. Thank you.
Thank you. The next question comes from the line of Ishan, an investor. Please go ahead. Ishan, if you can please unmute your line and ask your question.
Hello. Am I audible?
Yes,
Hello.
Ishan. Yes,
Yes,
Ishan,
please go ahead.
you're audible, yes.
Yes, sir. Congratulations, sir, on great results. And I had two questions related. One was, there was one mentioning about a new vessel that is going to be acquired. So how is what would be the capital required for it, and how is the company going to procure the capital for that? And one more was that there was recently too much fluctuation in the crude prices. So how is that going to impact the company? Yeah.
Right, Mr. Ishan, thank you for your question and thank you for your wishes. So, to come to your first question, all the vessels that we have purchased or we plan to purchase, we always go for a debt equity model with the banks, and we normally work in 70-30 or 75-25% debt equity model. That has always been the case with us, and it continues to be so. And on the second question, one of the reasons why we enter into long-term contracts is that the fluctuations in the market or the crude oil prices, like you mentioned, does not impact our earnings. So that is the advantage of going into a term contract, whereby 3 years or 5 years or whatever the term is. At the same time, if there is an increase in crude oil price, if there are any benefits, that also we do not get. At the same time, if the markets go down also, we do not get impacted majorly by those fluctuations. So we always work on term contracts. That has been the model for us, and we continue to do that successfully. And so at present, the crude price drop down to $60 a barrel is not an issue for us, or doesn't impact our model.
And one more question that I had was, there is a deferred tax that has seen an increase. What is the reason behind it?
For the increase in the deferred tax?
Yes.
That can be primarily attributed to the depreciation, sir.
Okay. Got it. Thank you, sir.
Thank you, sir. Thank you very much.
Thank you. We take the next question from the line of Amit Karawat from Global Financial Services. Please go ahead.
Hello.
Yes, Amit, please go ahead.
Yeah. Sir, congratulations on good set of numbers. I want to know, what is the charter hiring exactly? You take ship on lease from other ship owners and lease it further to your clients or like that?
Good afternoon, Mr. Amit. Charter hire basically means whomever we give the ship for employment to, they pay us a revenue. Typically, it works out to per day basis, and they pay us a revenue for that. So there are two ways to do that. Either you can give your own ship, the ship that you own, you can give it to the oil companies or anybody who wants to employ those ships, and they pay you the charter hire for that. Alternatively, you can also lease a ship from outside and give it to the end client and get the revenue from the end client, and then pass on the lease charges to the original owner. So both ways it is possible in this business.
Okay, sir. So, sir, I was looking the audit report of March 24. We have received 55 crore of charter hiring charges, and we have paid 22 CR for the group company Ocean Deep Energies. So I want to know, what is this?
So that that is the, like when I was answering your previous question, I had explained to you two models. So that is one of the other models where we have taken in a ship on lease and we have in turn hired it to ONGC. This was done back in 2023. We had got the contract, and that time we had leased a ship from outside, and we had participated in a tender for ONGC, and we entered into a 5-year contract with ONGC. So that is a lease hire payment. We have taken the vessel on time charter, whereby all the expenses for the vessel, everything is taken care by the ship owner itself. And that contract lease payment is what you're referring to.
Okay. Means we have taken on lease from Ocean Deep and we have give it to our client, ONGC, like this.
Yes, we are given it to ONGC for a 5-year contract, sir.
Okay, sir. Got it. And sir, one bookkeeping question. In your cash flow statement, you have reported increasing short-term borrowings in operating cash flow. It is set of cash flow from financing. So is it any discrepancy or like that?
So which line item is that?
In the prior this thing, that was the IPO money was wrongly categorized under operating instead of financing. Yeah, thanks for highlighting those. Yes, that has already been rectified in the current this thing updated.
So this year also, I think it's reported like that.
No. In the current financial year, they has been corrected. In the half-yearly financial year, there was an error in the reporting. It's an unaudited one which we have filed in the half-yearly reporting. The current one, it has been clearly filed. So.
Okay.
Yeah.
Okay. That's all on my side.
Thank you, sir.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question comes from the line of Ravi, an investor. Please go ahead.
Hello.
Hello, Mr. Ravi. Good afternoon.
Yeah, hi, sir. Sir, I had a couple of questions. So, firstly, the H1 was really weak for us, right? I mean, on a margin perspective, if we look at it, our EBITDA margins were more around 20-22%. And in H2, we caught up, and even the revenue has come up. So what was the reason? Is that the seasonality aspect of the business, or was there some runoff in H1 that we faced?
Thank you for the question, sir. So, to clarify that question, in the H1, we had one ship, that is ABS Anoki, which had come out of a long-term contract, and we had already secured the new contract. But in the new contract, it required that all the vessels should be DP2 as per the new contractual requirements of ONGC. So, the 3 months of the first quarter of the previous financial year, we were upgrading that vessel from DP1 to DP2. So that vessel then commenced earnings only from the 4th of July. So that was that 3 months of the period where the ship was getting upgraded was reflected in the first half yearly earnings. And secondly, one of the other vessels, Celestial, had finished the contract with ONGC, a long-term contract. It completed in the month of August, late August. And then we secured the new contract, which is what we mentioned as the 197 crore agreement, which we have signed with Schlumberger Asia Services for a renewed contract. And that new earnings, which were at more than double the previous earnings, started from October the previous year. So that was not there in the first half. So these two earnings these two increased revised contractual earnings are reflected in the H2, sir, and they were not there in the H1. It was not attributed to the seasonality because our business is not linked to the seasonality. If by seasonality you meant a monsoon period or anything like that, no, it is not related to seasonality, sir. Our business model on our contracts are round-the-year contracts, and they are not monsoon-based contracts, sir, which many of the operators have.
So these new contracts, 184-day charter, 158-day charter, all of these contracts, then after these are done, again there'll be a gap before we get a contract. So again, our H2 could be weak this year?
No, that will not happen, sir. So, that is the reason why we have, when we are reporting, we specifically mentioned that they are DP2 platform supply vessels. ABS Anoki was one of our older existing vessels from 2015 onwards. So that was originally a DP1 vessel, which we had to upgrade to come up to all the new technical requirements. Now, any vessels which we are procuring, we are only taking on board DP2 vessels. So we don't have to do this upgrade where we have to go out and do the upgrade and come back. So we do not forecast or foresee any such long breaks for these vessels to transition from the short-term contracts to long-term contracts, sir.
And this 197 crore order, what is the timeline for this order?
So this order is already commenced. It is 3-year firm plus the modification period required for the charters to do the modification. So that will probably run into more than 3.5 years. And the charterers further have an option for extending the contract by another 3 years, and then they have one more option to extend it by another 3 years. It is all in their options.
Okay, so how do we expect the revenue from this, right? 197 will accrue equally over 3 years, or first the modification will be some different amount? How will it go?
So 197, actually, when we complete the contract for the first 3 years, it may actually turn out to be more than 197 crores. Actually, it may be much more than 197 crores.
Okay, so that's around 50 crore per year at least, minimum.
Roughly, sir.
Okay, so this has commenced. When has this commenced?
October 2024, November 2024.
Okay, so the impact of this has already started in our H2, right?
Correct, sir. That's right.
So what are the margins on these orders? For this 197 crore order, then this 28 crore charter, 21 crore charter, what kind of margins are we looking at?
So, you are asking vessel-specific margins or?
Yeah, vessel-specific or even contract-specific. The EBITDA margin, what are we expecting? So
the vessel EBITDA margins, we expect it to be in the range of 60 to 65%, sir. In that range it should be.
EBITDA margin?
EBITDA margin, yes. For the vessel.
Currently our EBITDA is just 33%, right?
Correct, sir.
So you are saying comparable to that 33, it could be 60 to 65% on these new contracts.
Correct, sir.
But why? What is the reason for this such a huge jump? Is it the charter rates or how is it
Because of charter rate revision, sir.
Oh, okay. So sir, if we look at it, right, 100 crore H2, H2 was 100 crore, 47 crore worth, you've written 184 days, right? So in this year in H1 itself, we can expect a revenue of 150 crore, right? With improved margins.
That is a possibility, sir. 135 to 140 crores in that range is a possibility, sir. Yes.
In just H1, right, this year?
That's right, sir.
Okay. And sir, on a PBT level also then, we can assume the similar accretion, right, on the margin front?
The PBT level also, we hope that it translates into PBT level also, sir. But we have to wait and see, because we have to see also how the new vessel addition comes in, when it comes in, and when it starts kicking in. That also we need to see. So exactly we are not able to forecast, but that is our expectations, and we hope to achieve that, sir. All going well.
Yeah, because it does. Okay, got it. So next question is on this, right? What is our segment-wise revenue breakup on ship management, on the owned vessels, on marine services, and on port services? Approximately in FY25, what would that be?
So, broadly speaking, sir, from the owned vessels, and leased-in vessels, in 23-24, we were having about 40% of revenue coming from the ship owned and the leased ship businesses, and the ship management business and the port services altogether was contributing about 60%. Now that we have bought in the assets from the IPO proceeds and everything, in 2024-25, we hope that we are assuming that the earnings from the ship owning business will go up to 55 to 60%, and correspondingly the ship management business will probably come down to will be in the range of 40%, sir.
Okay. And so this debt, right, 178 crore debt, what is the average like finance cost? Like, is it 10% or is it higher or lower?
We work in the range of 9.5% or lesser, sir.
Okay. So this year our finance cost could be close to 18 to 20 crore, right? In this financial year.
For the 26-27 you're asking?
No.
FY25-26?
Yeah. Yes, right.
Yeah. So with the current two vessels, yes, it should be in that range. If we acquire, if the third acquisition also, we are planning one more. If that also comes through, we expect that number to go up slightly, sir.
Okay. And the gross tonnage on that one also will be around 2,000 tons, or will that be higher?
Gross tonnage will be, I think, around 3,000 to 4,000. We expect, sir. Maybe 4,000.
Oh, that will be a larger one, so.
Correct, sir. Correct.
And our current fleet, like the two new acquisitions were 2,400 tons each. The current fleet is like what average?
You mean to say gross tonnage wise, sir?
Yes.
So gross tonnage wise, two ships, I think, three of the vessels, the two owned ships will be in the range of 4,000. The leased-in vessel also will be in the range of 4,000. The two new acquisitions will be in the range of 2,000 to 3,000. The old, the Anoki that we have, I think is in the range between 1,500 to 2,000 tons, sir. So average, if you want to take an average, I would say it would probably be somewhere in the range of 2,750 to 3,000 range, sir.
Okay. And so last question, this presentation, Rohini, Dhruva, Dhanika, these three ships, we can't see too much revenue. Like, I don't know why that is happening. Like
because they are actually, the revenue, they are actually small hovercrafts which operate only in the port sector. And they are hovercrafts which work in the Chennai port and the Kamarajar port sector, sir. So they are engaged on a much smaller contracts compared to the offshore oil and gas contracts. And it is one of the port services that we do under our one of the verticals that we do, sir.
Okay, understood. So, okay, fine, sir. Thank you so much. That was it from my side.
Thank you, sir. Thank you.
Thank you. Ladies and gentlemen, in the interest of time and fairness to others, we request you to restrict to 2 questions per participant and rejoin the question queue. The next question comes from the line of Sahil Raj from Samdariya Capital Ventures. Please go ahead.
Am I audible? Hello?
Yes, sir. You're audible, sir. Good afternoon.
Good afternoon, sir. So, one small request, and I don't know if it has been already been asked. Are we going to release quarterly updates or maybe one-page summaries going into FY26? Is that a possibility?
As of now, we intend to do half-yearly, sir, as per the regulatory requirement.
No, I do know the regulatory requirements, but if given the management caliber, I'm saying that if the management has any intent to do so.
Okay, sir. I will take that question and I will definitely put that under consideration, sir. But I was only aware of half yearly, but we will definitely look into this one, sir. Going forward.
A small suggestion, sir, not any bindings on anything of that sort. Maybe if your team can guide you better, so maybe if you can take that into.
Sure, sir. We'll take that into consideration, sir.
And any further plans for fundraise this year, maybe in the second half or maybe going ahead? With that sort? Or are we able enough to maybe...
We are not planned anything at the moment, sir. At the moment, we are focusing on completing these acquisitions that we are doing and done, and we would like to first put them into the long-term contracts because 3 acquisitions is big, and we would like to settle the operations and bring these revenues into track before we work on the next acquisition, sir. But it is important to have a settling period in between also.
All right. That was my question. Thank you very much.
Thank you, sir.
Thank you. The next question comes from the line of Anil Kumar Sharma, an investor. Please go ahead.
Good afternoon, and thanks for the good set of numbers. Congratulations for that. So my question is, sir, what is the exact rough idea of EBITDA margins for this coming year, financial 25-26? And number 2, you have given a good numbers, but no dividend is there. Is was not considered, and when we can expect any dividend from the company?
Hi, sir. Thank you, sir. Thank you for your question. So to answer your first part, going forward, the EBITDA margins, absolute increase in EBITDA margins should be in the range of about 100%, but the EBITDA margin should be going forward should be in the range of 40 to 45% is what we hope to achieve, sir.
Good.
And your second question was regarding dividend. We just got listed, sir, and we are in the process of fulfilling our IPO, whatever we committed in the IPO, that is to acquire new vessels and grow the asset base and grow the value for the shareholders. Going forward, definitely yes, dividend is something we will be working on and targeting also.
Thank you. Best wishes, sir.
Thank you, sir. Thank you.
Thank you. We take the next question from the line of Prince Chaudhary from Pink Wealth. Please go ahead.
Hello. Sir, we have a question that, since we have this contract value of 197 crore of simulation vessel, this vessel is already onboarded or it's gonna come in June?
No, sir, this is an existing vessel. Good afternoon to you, sir, first of all. This is an existing vessel which already commenced this contract from the November of 2024 onwards, sir. And the vessel is being modified, or rather, I would say converted by the charterers Schlumberger Asia Services into a well simulation vessel. So it is already on contract, and the earnings are already coming in.
And it is converted also?
No, the conversion process is going on now, sir.
So when this conversion process is going on, so till that we will not be able to get the revenue since the work must be going on. So how much time it will take for this conversion?
We are getting paid during the conversion process also, and when the conversion process completes and the vessel starts operating, the charter hire rates will further go up.
And so what is this vessel name?
This particular vessel name is Celestial, sir. Celestial.
Got it. And okay, so this is for 3 years, right? This contract value.
Follow-up questions, if you can please join the queue.
It's just a continuation. Just 1 second.
Sir, please go ahead, sir. I missed your question.
This 197 crore contract value is of 3 years or is like for what is the duration of this contract?
Yeah. So we have entered into the contract for 3 years, plus whatever modification period required by the charterers to modify the vessel. Plus we have given options to charterers. Charterers have the option of extending the contract by another 3 years and followed by another 3 years more. They have the option of extending, sir.
Okay, got it, sir. Thank you, sir.
Thank you very much, sir.
Thank you. Ladies and gentlemen, in the interest of time, we request you to restrict to 1 question per participant. The next question comes from the line of Manish Bhatia, an investor. Please go ahead.
Hi, sir. Congratulations on your good results.
Sir, good afternoon, and thank you very much, sir.
Hi. Sir, just wanted to know, after, everything is done and you have acquired the third vessel as well, this year, so what would be the total loan, that approximate loan that will be showing on your books? So how much loan do you think that you'll be having after, acquiring the next ship that you're going to do this month? Approximate amount should do for me.
So approximately, I think we should be looking at 300 crores.
Okay. So right now it is 178. It will be somewhere around 300, right?
Yes, sir.
Okay. Okay. Just can I ask one more question? Okay.
Yes, sir. Please go ahead, sir.
Okay. So this SLB contract that you had for 197 crore, so is that a special ship that you have, or it's like a normal vessel that that you had? It's just because it's been contracted with SLB, that's why they're paying the better amount, or is it something special in that ship?
So this was actually a ship which we already owned from 2015 onwards. It was originally a DP2 multi-purpose supply vessel, platform supply vessel, and SLB has taken this vessel for the purpose of well stimulation operations, for which they have in turn a contract with ONGC. So they have taken this vessel and they are modifying this vessel at their cost and time, and they're converting this vessel into a well stimulation vessel. The process is ongoing now. Once that is completed, SLB will deploy the vessel in the Indian oil fields, and they will service ONGC, and vessel will continue to operate for a period of 3 years from the commencement of operations on.
Thank you. We take the next question from the line of Ravi, an investor. Please go ahead. Ravi, if you can please unmute your line and ask your question. Since there is no response, we move on to the next question from the line of Lakshman, an investor. Please go ahead.
Congratulations, sir. Good afternoon and congratulations for an exceptional result. Actually, my question was asked by a previous participant, but I'll just add to that question, sir. You said somewhere around 300 crores is the debt which will be on your books, right? So the EBITDA margin considers the debt repayment interest, the finance cost, and after that you are saying that we will have a EBITDA margin of somewhere around 43.
Sir, this is CFO Anand here. I will be answering this question. See, EBITDA don't consider that interest cost, right?
Yeah.
EBITDA margin doesn't consider the interest cost, sir.
Yeah. Agreed, sir. Agreed.
Yeah.
Thank you.
Yeah.
Thank you. We have follow-up questions from the line of Manish Bhatia, an investor. Please go ahead.
Sir, it's just a question about, I understand that, many things have happened after the IPO, and share price is something which management cannot control. So, markets are irrational, and, some policies from SEBI has been very harsh on SME of it. So, what I wanted to know, this industry for shipping, especially GE shipping as well, gets a very low PE of 5. So is it because of the cyclical nature of shipping business, or do you think there can be other reason as well?
So so good afternoon and thank you for your question. The primary risk in shipping is that shipping is a very cyclical business. There's always cycles of boom and there's always a cycle of lows. So that could be one of the reasons for GE Shipping's PE, but I do not know much about GE Shipping's PE and the numbers. But having said that, we focus on term contracts primarily to not have the cyclical impacts coming on to us. That is the primary reasons for entering into term contracts. That is a model that we are following here, sir. So that, even during the course of the tenure of the contract, if there is a low cycle, that particular contract doesn't get impacted by it, sir.
Okay. Okay, fine. Thank you.
Thank you, sir.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. Since there are no questions, I now hand the conference over to the management for their closing comments. Chandni, please go ahead.
Yes. Thank you everyone for joining the conference call of ABS Marine Services Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining the conference. Thank you, Captain Jeevan. Thank you, Ananta, sir.
Thank you, madam. Thank you, everybody. Thank you very much.
Thank you. On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.